What? For us to profit, we have to have a pattern of distinction, meaning that the price has to move up first and then back down to the same bottom and form that V-shaped configuration, and leaving the second bottom of the indicator sharply higher than the first one, and preferably remain above the signal line. In this case, none of those things exist, so I have no trading opportunity of any kind that exists from this pattern, up or down. Through the other time frames, what do I see? I'm still looking for the same pattern. Do I see a V-shaped price peak that's easily recognizable with a glance at the pattern through any of these time frames? Do I see? Yes. I see a 15-minute chart that had the price over here at this level, then it moved down and subsequently moved back up to a higher price peak. But it was left with a much lower technical peak that is undermining the price. Was that even at its peak sufficient enough to justify buying out of the money put options that expire Friday, 2 days from now? The answer is it's not a good pattern. It's not very qualified. Is it weak? Does it say the price will come down a little bit? Yes. But to buy out of the money put options that have a value that trades under 10 cents a share means that you have to buy options that are, well, we can take a look, okay? Those out of the money puts that did trade for under 10 cents a share were trading for 8 cents. They have moved up to 11 cents. Is that a profit? Absolutely. How much profit? Is it the kind of thing like we like to talk about all the time, multi-1,000%? Or no, but is it a profit? Mm-hmm. This little profit here is better than the world's best performing mutual funds did all of last year, the best. And it happened with only a very marginal pattern, and it happened in just minutes. And that is a fact. That is today's activity right there in front of you. And that's with a pattern like this. Did it have a divergence? Yes. Is this technical top much weaker than this one? Absolutely, positively. There's no question about it, is there? This technical peak here does not support a higher price like this in any way. This would be the type of picture you're looking at. It would be the technical peak, and that's this price. So draw a straight trend line here, right? Because that's what I have here. And then the angle from the technical peak there to the last technical peak, which is an angle like this. I'll take that information and overlay it like this, and it's got an angle like that. See? So when the price was up here at 190, almost at 199, 198.81, technically it should have been down here at 198.45 or something like that, is what it's saying. So in other words, it's undermining a price by about 40 cents, and it's Wednesday. Expiration is Friday. Out of the money puts that trade for under a dime, the nearest strike price would be 196. But yet this technical pattern only says the price is capable of moving down to 198.40 something. So in and of itself, that information alone, does that justify buying an option that's $2.50 below the current price? The answer is no. Right.